All right, today we're doing a deep dive into the anatomy of a penny stock that, well, it basically went over a cliff. And then, out of nowhere, it started flying. We're talking about UTime Limited, ticker symbol WTO. Its chart tells an absolutely wild story of a catastrophic collapse, followed by the sudden, almost unbelievable burst of life. So let's dig into the technicals, slide by slide, and see if we can figure out what is really going on here. So let's just set the stage here. Since August 18th, this stock didn't just fall, it completely imploded. It lost a staggering 97% of its value. I mean, can you imagine watching something go from over 90 cents all the way down to just a couple of pennies? For anyone who was holding on, that was a near total wipeout. And, that really brings us to the central mystery of this whole thing. What happens after a 97% collapse? I mean, usually that's it. The story ends right there. The stock just kind of fades away. But not this one. This one suddenly erupted with a frenzy of activity. So the question is, how? Why? That's the puzzle we're going to try and piece together today. Okay, so let's start at the very beginning. To really understand the explosion, we first have to understand the wreckage it came from, right? This is the story of the fall. So who exactly is UTime? Well, according to the report we're looking at, they're a microcap company based in China. And their mission, honestly, is surprisingly ambitious. They build low-cost mobile phones and accessories, a lot of times with AI features, and they serve emerging markets in places like India and Africa. Their whole goal is to help bridge that digital divide. But the market has been absolutely brutal to them. The technical report does not pull any punches here. It calls the stock's performance a savage structural plunge. And just to be clear, that's not just language for a few bad trading days. That's what you call a fundamental, deep-seated collapse. And then, right from the ashes of that plunge, something totally unexpected happened. This is where things get really chaotic, building into what the report itself calls absolute pandemonium. So, on November 14th, the stock closed at just over 2 cents. Okay, this is ground zero. This is the launching pad for the explosion we're talking about. Remember that number, 2.4 cents. Because on that very same day, this is the number of shares that were traded. 1.44 billion. With a B. For a tiny little stock that's worth pennies, that kind of volume it's almost unbelievable. The report's words for it, obliterating benchmarks. Yeah, I'd say so. And this slide really puts that number into perspective. That 1.44 billion shares, that's an increase of more than 8,900% over the average trading volume from the last 20 days. That's not a spike, folks. That's a vertical wall of sudden, frantic interest. So what lit the fuse? Well, this penny stock pandemonium seems to have been ignited by a perfect storm. You had a better-than-expected earnings report, and you combined that with a surge of hype around the company's new AI devices. It was just enough good news to attract this absolute tidal wave of speculative trading. And all this sudden chaos, it created a battlefield. On one side, you've got the bulls, the optimists who see this as the start of some epic comeback story. And on the other side, you've got the bears, the pessimists who are convinced this is just a trap, a final gasp before the stock flatlines for good. Now, to argue their cases, both sides are looking at what we call technical indicators. Just think of them as financial clues, patterns in a stock's price and trading volume that analysts use to try and predict what's going to happen next. And right now, for WTO, these clues are pointing in completely opposite directions. It's a total tug of war. And this slide lays out that conflict perfectly. So the bears are pointing to that brutal plunge and a strong downtrend indicator, and they see what they're calling an impregnable fortress of resistance. But the bulls, they're telling a completely different story. They see a stock that's plunging oversold, meaning it's been beaten down so much it just has to bounce back. Plus, they see huge potential in AI and mobile. They think this is the perfect setup for a rebound. And this slide gives you a little glimpse into the bear's mindset. All these numbers you see represent different moving averages, which are basically past price levels where sellers have historically jumped in and pushed the price down. So to a bear, this isn't just data, it's a massive wall that the stock has to somehow break through to go any higher. They see it as an impregnable fortress. But here's the bull's counterargument. An indicator called the RSI, or the Relative Strength Index, is at a very, very low 16.65. Now, for context, anything below 30 is typically considered oversold. The argument here is that the selling has been so extreme, it's like a rubber band that's been stretched way, way too far. It has to snap back. So you've got these two powerful forces just clashing with each other. Where does WTO go from here? Well, the analysis lays out three pretty distinct possible futures for the stock. Okay, so path number one is the bullish dream. New AI partnerships trigger what they call a squeeze mania, and the price just soars. Path number two is the bearish nightmare. The trading volume completely vanishes, the hype dies down, and the stock just resumes its free fall, maybe toward 1 cent. And finally, path number three is, well, the neutral case. The stock just kind of drifts sideways, in limbo, waiting for the next big piece of news to make its move.
So after weighing all the evidence, the bulls, the bears, all the possible futures, what is the report's final verdict? What's the takeaway from this financial tug of war?
This quote from the report really sums it all up perfectly. The situation is defined by ferocious, bearish fury, which means the negative signals are pretty overwhelming. At the same time, there are compliance cliffs. That's the very real risk of getting kicked off the NASDAQ exchange. The takeaway? Anyone involved needs steel nerves. This is a high-wire act with no safety net. So let's sum it all up. What's the bottom line here? First, the bearish indicators are dominant, plain and simple. While a turnaround is, possible, the report is very clear that it's a bet against a very, very strong trend. In fact, it gives the stock a technical score of 100. That's the highest possible score for bear market conditions. Ultimately, the report says WTO is the very definition of a high-risk, mobile penny vortex.
Which really leaves us with this final thought. When you have a 97% collapse colliding head-on with an 8,900% volume surge, you are left with a perfect storm of conflicting data. And the ultimate question this whole thing raises is this. In a battle between a catastrophic history and a speculative spark, how does anyone, investor, trader, anyone, find the real signal in all of that noise?